Hey traders, this is Christian Fromhertz, Tribeca Trade Group, with your weekly market recap and the Tribeca Trade Group Market View. So I just want to do a quick recap of last week, just to kind of help spot trends and some outperformers, some underperformers. So number one, what did we see last week, and actually for the last 2 weeks? SPY exactly flat for the week. Monday we had a real nice day. We saw a lot of call buying, but that kind of got squashed when some of the Fed governors talked about the possibility of a rate hike. So for the week, we finished exactly flat, just like we did the previous week, and we're still in an uptrend. But it looks like we've lost a little steam, we've lost a little momentum the last couple of weeks. It's been a little bit of a frustrating market for traders to trade. However, the good part about this is, especially, and when I say traders, especially index traders, obviously the major indices just aren't moving, but it remains to be in a stock picker's market. I look at this every week just to see where implied correlations are extremely low. So what does this mean? It means that stocks, indices, they are not moving in line together. You have names that are outperforming, you have names that are underperforming. So for example, for last week, what did we see in terms of outperformance? All the energy names. I mean, if you were in energy, in a couple single names, this group really outperformed. Oil services were up 4.7%, XOP up 4.3%. Also, the banks did well. Also, the banks were up 2%. Semis did also, semis and tech also did well, up 1.6%, especially towards the end of the week after Applied Materials reported. On the downside, you could be long some of these groups and make money, and you could also be short a couple of the defensive groups, which really tailed off towards the end of the week. You had telecom down 2.5%. You have REITs down 2%, utilities down 1%. And a lot of this is because of, which I view as one of the most important charts right now, or charts to watch, is bonds. If you go to the daily chart and bonds, you could see that for the better part of the last couple of weeks, we've been moving sideways. And I've been watching, since we're kind of in this value area, either, for a move to the upside, for continuation of trend, or a move to the downside. Well, it looks like the latter is winning out right now. We're just below the value area. We just closed barely above it. We actually came back from the lows on Friday, but, it does look like this is slipping here. And I see a lot, if we do continue to slip below value, what I would be looking for in ZB is a move down to 168. This is the VPOC. This is a version point of control. And I think that we could go down and touch here. So if that happens, if bonds become weak, the price of bonds go down, and what that means is rates go up, I would look for a further continuation in selling in telecom, which I'm out of my short trade in telecom, which worked out really nicely. I had this all over Twitter yesterday as when this broke to my target. Same thing in utilities, which I was short, which actually came back a little bit last week after the Fed minutes. And REITs, which is what I'm looking at now. And I actually just initiated a swing trade. There's a video on that. If you're part of the swing trade program, you have received the video. All of the reasons why I like a short right now in IYR or REITs. One of which is the PE is a 35, by the way, in the REIT sector. But so let me continue with the video here and what I want to talk about. Why I'm getting a little bit cautious here. So one thing, we did do a poll last week in the trading room, which I find very useful. We're at August expiration is now behind us. Sept is front month. So it becomes, how you want to position yourself going into Sept. And with, some traders being frustrated at the lack of follow-through move, how can you position yourself for this? So first of all, what I did last week on Friday was, what are traders expecting? Traders in the Tribeca trade room, what are they expecting for the next month? Are we going to be up huge? Are we going to sell off? Or are we going to be flat? Well, the consensus was, it looks like there's a little bit of a skew to the upside, plus 1%, but you could see the majority of responses coming in right around flat and maybe up a little bit. So if we continue to have that market, and if that's what you think the market is going to do over the next month, how do you want to be positioned? Well, one trade that I looked at, and I looked at the major indices and also where you can get the most bang for buck. But I looked at small caps. Why small caps? Because if you look at where they are on the weekly chart, they've had a real nice move up here, and they're in an uptrend, but they've gone all the way through the value area and now maybe pausing a little bit here at the top of value, which sometimes is what we see before that next leg higher. So if we do that, and the other thing that I'm realizing here as well is the yellow line on my charts is the 5-period exponential moving average. The blue line is 20-period exponential moving average. I like to look at these when you have big separation. It kind of gives me an idea that maybe we're a little bit extended here. Not really extended on the RSI. We're getting there, but if you look at this separation, it's pretty large. Notice every time, why I like to look at this is, even on the downside, when there's big separation, we usually come back up. So right now we're having that big separation between the 5-period and the 20-period. So I think it makes sense here, now that we're at major resistance, to put on a credit IWM call spread, which is what I did for the month of SEP. I sold the 124 and I bought the 127 strike and collected 90 cents. So, if your view is a little bit different than mine, you can you can put the strikes up a little bit higher than what I did. But I like the fact, especially, as a hedge against some of my longs, is to essentially have something that will earn me money if we continue to kind of trade in a flat to up 1% type market. The other thing that has me a little bit more cautious than I have been over the last, I'd call it last month and a half, which I've been very bullish, is taking a look at the Fed fund futures, what they're expecting for an interest rate hike. And it's very low, even after some of the Fed governors came out last week and kind of are torn between whether or not to raise interest rates. Take a look at the probability of a September interest rate hike. It's 22%. For even December, it's only 51%. March, it's 59%. These expectations are extremely low. The market is not expecting an interest rate hike. So, on Friday, we have Janet Yellen speaking. I think the risk is to the upside. If the market was already pricing in some sort of an interest rate hike coming in the next couple months, then I would say, okay, the market is already has a feel for that. But being that interest rate expectations are so low, if they, whether or not it's actually going to happen, the rates, the Fed fund futures are not implying that. And I think the risk is there's risk in the market being that there's no expectations right now. So if Janet Yellen comes on next week and says, we are considering as usual, we're data dependent, but we're getting closer to a rate hike, I think there could be some volatility in the market next week or the following week, because the market is just not expecting it. And if we start to get the probability moves up to say a 40% chance of an interest rate hike, the market's going to go down, is what I believe. And same thing for December. Maybe if September moves up to say a 65% chance, or even February or March, what's going to happen there is the market most likely will come down a little bit, because we're not expecting it as of now. So that's what I think is something that you want to be a little bit careful right now, is that the market is not pricing in any sort of probability of an interest rate hike. And I think that could be damaging for the market if Janet Yellen comes on and says something a little bit different. Okay, so other names to watch, or other things to watch. Fund flows for the week. Another $2 billion of inflows last week. However, this occurred mainly Monday and Tuesday. Wednesday, Thursday, and Friday, basically flat. And I do rely on this as well as technicals to tell me, to kind of give me an indication if the market is being bought or not. In sectors, there was separation, just like we saw in performance. A lot of energy inflows. Energy had, I think it was 700 million in inflows last week. Other areas that had inflows were materials, tech, and financials. Healthcare and industrials, utilities had outflows, but you could see not nearly as big to the downside as were the inflows. And then the main theme that I see, or two themes, is that emerging markets continue. I put continue to steal the show. Now 7 straight weeks of emerging market inflows. This finally, CNBC is waking up to this. They had mentioned it a couple times last week. This is something that, if you've been watching my videos, I've been talking about, just humongous inflows going into emerging markets. That's why I've liked emerging markets. That's why I've been long EEM. But it's getting a little bit mature right now. 7 straight weeks. It's been fairly consistent, so I would watch for a change here. Every day last week, emerging markets, EEM, VWO, these types of ETFs saw inflows every day last week, as they have been seeing for the last 7 weeks. So you want to look for a change in trend here. So right now, the trend is your friend. Emerging markets are where I want to be until this changes. The other thing which is a little bit disappointing, if you remember from last week's video, Europe outflows kind of tapered off 2 weeks ago, but they picked up again this week. So disappointing. I started to take a look at some of the European charts, like Germany, the DAX, EWG. But unfortunately, the outflows started to pick up again, which is what we've been seeing all year long. You could see that EWG had $255 million in outflows. So it kind of remains that the trend is to the downside, and I'm looking for that to stop and maybe to see some inflows before I even look to go long into that area. But something on my watch list. And then finally, things to watch for this week. Deere had that huge move on Friday, positive earnings, positive guidance, but the whole group is looking like it's trending up. So I'm watching the MOO ETF, that's the agriculture ETF, as it's now into value. And we're starting to see this in a lot of different sectors. A lot of sectors that have been in downtrends, they've moved really nicely from the lows here, but now they've got some work to do. They're now into the yearly value area. So that's base metals popped up on my radar this week. That's aluminum, copper, and zinc. They're also just started to get into the value area. Same thing with banks. Banks had the KBE ETF had $208 million in inflows, positive sign. Something to watch with those interest rates. We talked about utilities, telecom, REITs being negative. If bond prices go down, rates go up. The other side of that is banks. They do well once interest rates start to increase. So if you start to see that breakdown in TLT or the long bond futures, I would keep an eye on banks, especially right around this area as we're getting into the bottom of value. But that's the trend to watch in terms of a lot of sectors. You could look at this in terms of retail, nice couple weeks, in the beginning of the year had a nice increase and then stalled at the bottom of value, sold off for a month or so, and have come back, and now they're right at the point where they failed last time. So I would watch, keep an eye on XRT, and also a few other sectors that are doing this as well. So, now it becomes the test if some of these beaten up sectors, where we're not even close to the highs of where they were last year, whether or not they can continue to rally, and especially into this value area. So that is the end of the video. Also in the newsletter, we have Pat's stocks to watch. He's got, I think, 16 different stocks on his radar that's on his watch list this week. So, you have to be a subscriber to Tribeca Trade Group to see what stocks he's watching. I often get the question of, how do you use Pat's stocks to watch? Basically, if he's pointing them out because of whatever is lighting up on his radar for these to come into play, I want to take a look at these. I want to have these written down so that when we see unusual option activity, when we see big buyers, I know and I'm prepared because I've reviewed his stocks to watch as positive setups. This way, I'm not hesitating at all by seeing that option activity and being able to go in because we've done our homework. So you can go ahead and you could subscribe or get involved with the Tribeca Trade Group, get involved in our live trading room. Also, if you want to be a part of our swing trade program, you can do it here as well. So that can be found on tribecatradegroup.com and in the product section. Thank you again for watching today's video, and have a great weekend.